Welcome to the market's mindset. Every trader knows the importance of having a solid trading plan. Your rules, setups, risk parameters, and management strategy all clearly defined. But here's the real challenge. Most traders don't struggle to make a plan. They struggle to follow it. Today we're going deep into the psychology behind sticking to your trading plan, why you keep breaking your own rules, what's happening in your mind when you do, and how to finally build the discipline to stay consistent no matter what the market throws at you. Let's get into it. 1. The illusion of control. When you create a trading plan, you're thinking logically. You're calm, focused, and rational. Your prefrontal cortex, the part of your brain responsible for planning and reasoning, is in full control. But when you're actually in a live trade, that logic gets hijacked. The market starts moving, the candles flicker, and emotions take over. Your brain releases stress hormones, adrenaline, and cortisol that shift you from logic to instinct. You move from planned behavior to reactive behavior. That's why, even though you know you should stick to your stop loss, you move it. It's why you know you shouldn't revenge trade, yet you do. You're no longer trading your plan, you're trading your emotions. The illusion of control makes you believe you can outsmart your rules in the moment. But every time you override your plan, you're training your brain to think rules don't matter when emotions are high. And once your brain learns that, it's a very hard habit to break. 2. The dopamine trap. One of the biggest psychological forces that causes traders to break their plan is dopamine, the neurotransmitter that drives reward-seeking behavior. Every time you take a trade, you get a small hit of dopamine, especially if it's impulsive or risky. And when that impulsive trade wins, your brain links breaking the rules with getting rewarded. That's incredibly dangerous. Because the next time you're in a trade that doesn't fit your plan, your brain will crave that same dopamine hit, even though it knows the logic doesn't make sense. This is how trading can quietly turn into a cycle of addiction to stimulation, not to success. You're not addicted to winning trades, you're addicted to the feeling of being in a trade. That's why the best traders often say, "My edge isn't just my strategy, it's my ability to sit still." They've learned to break the dopamine cycle. They find satisfaction in discipline, not in action. If you can rewire your brain to feel good about following your plan, rather than just placing trades, your performance will change dramatically. 3. Emotional identification. The ego problem. Many traders fail to stick to their plan because they identify too strongly with their results. When you win, you feel smart. When you lose, you feel stupid. But that emotional attachment turns trading into an identity test. So when your plan tells you to take a loss, your ego resists. You think, maybe if I hold a bit longer, I can avoid being wrong. In that moment, it's no longer about the market, it's about your self-image. This is one of the hardest psychological battles in trading, learning to separate your self-worth from your results. A losing trade doesn't mean you're a bad trader. It means your plan did exactly what it was designed to do, protect you. The moment you stop needing to be right and start focusing on doing what's right, you'll notice your discipline strengthens automatically. 4. The fight between emotion and logic. When the market moves against you, your brain perceives it as a threat. And just like any threat, your survival instincts kick in. Your amygdala, the emotional control center of your brain, activates. It floods your body with stress responses, and suddenly your logical mind gets sidelined. You start reacting from fear, not reason. You'll close trades too early, hesitate to take valid setups, or overtrade out of frustration. To counter this, professional traders use what psychologists call prefrontal training. In other words, building habits that strengthen your rational decision-making under pressure. Things like taking deep breaths before entering a trade, physically stepping away after a loss, journaling emotional triggers. These small actions help re-engage your logical mind, bringing you back to your plan instead of letting emotions run the show. You can't eliminate emotion from trading, but you can learn to respond instead of react. 5. Overconfidence after a win. Breaking your plan doesn't only happen after losses, it happens after wins too. A few winning trades in a row can trick your brain into a false sense of mastery. You start to think, I'm on a hot streak, I can size up, I can take more trades, I've got this figured out. That's when overconfidence replaces discipline, and the market humbles you quickly. This is the psychology of overlearning success. When your brain misinterprets short-term wins as proof of long-term skill, the antidote: treat every trade as independent. Your next trade has nothing to do with your last one. Your plan exists to keep your emotions, both positive and negative, out of your decision-making. The professionals don't ride hot streaks, they stay level, no matter what their P&L says. Because consistency isn't built from emotion, it's built from repetition of process. 6. Lack of emotional recovery time. Another reason traders break their plan is emotional fatigue. Trading requires focus, patience, and restraint, and those are all limited mental resources. If you're trading tired, stressed, or distracted, your self-control weakens. You'll justify breaking rules that you'd normally follow. That's why rest and recovery are part of discipline. Stepping away from the charts after a loss isn't weakness, it's maintenance. It resets your emotional baseline so your next decision isn't made through frustration or fear. The traders who seem robotic in their discipline aren't emotionless, they just don't let emotional fatigue dictate their behavior. They've learned that mental clarity is part of their trading edge. 7. Building the habit of discipline. So how do you actually train yourself to stick to your plan consistently? The same way you build any habit, through repetition and accountability. Here's a practical process that works. Write down your plan, clear, simple, visual, not in your head, on paper or screen. Track every trade, whether it followed your plan or not. Reward yourself for following the plan, not for winning trades. Review weekly, focus on behavior, not just outcomes. Over time, this builds a new feedback loop in your brain. Discipline equals reward, impulse equals punishment. When that connection becomes strong enough, sticking to your plan stops feeling like effort, it becomes who you are. Final thoughts. Most traders think success comes from strategy, but the truth is, it comes from psychological discipline. Every rule in your plan is there to protect you from yourself. When you break it, you're not defying the market, you're defying your own wisdom. Sticking to your trading plan isn't about willpower, it's about building emotional awareness, breaking addictive patterns, and training your brain to value consistency over excitement. So the next time you're tempted to break a rule, pause and ask yourself, am I trading the market or my emotions? If you can answer honestly, you'll already be ahead of 90% of traders. Thanks for watching. Please like and subscribe for more insights from the market's mindset.